Boom shakalaka, the nail in the coffin for Bitcoin and cryptocurrencies. How to handle this upcoming unexpected recession. And the two must-see charts for everyone out there. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video we have a lot of very interesting charts for Bitcoin and cryptocurrencies, including the nail in the coffin for risk on assets, why you needn't mind, and two charts that'll just get you a little bit happy in the pants or in the heart or wherever you want to be happy. Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us on Twitter at Crypto Love. Push that like button. Today, fear and greed at 53, up from yesterday, 50, still in neutral territory, not yet back in degree. The overall market down a little under 0.25%. Bitcoin at 23,347, Ethereum at 1626, BNB at 302, XRP 37 cents, Cardano 36 cents, Dogecoin 8 cents, and Polygon $1.23. Bitcoin right now sitting just above $23,000, this high area on the volume profile, also right above this yellow line, the 50-day moving average. Could potentially be a little bit of support for Bitcoin, as we saw it do the same back here the second week of February. We'll have to see over the next few days. But right now, it looks like we have the nail in the coffin for all risk on assets. They're in trouble. If we take a look at the US dollar currency index, it's broken above its macro uptrend line. You can see this uptrend line right here. It was very strong support here until the DXY took off and then came back, broke through there. Everybody thought yes for Bitcoin and risk on assets. Well, it looks like it broke back above there. If it stays there with this bullish momentum it has on the MACD, may not be great for some of these risk on assets like Bitcoin and cryptocurrencies. Pair that with the era of easy money being over. Domestic banks have been rapidly tightening their lending standards. These levels last seen during 2000 dot-com bubble, 2008 housing crisis, 2020 COVID crash, once again tightening their lending standards. Easy money is over. If people don't have easy money, how are they going to plop it into risky assets 100x? I know, I had the same question. So, that being said, where is Bitcoin? It appears like it's in its camping ground. If we compare this cycle with previous cycles, formed a very similar macro structure where we had all up territory, we had a little bit of a top, we had the camping ground in green, and then a first station before all up territory to the new top. So if Bitcoin were to repeat itself, we had the top, very clearly had the top. Okay, we might be in the camping ground territory before we take off to the next structure area around $40,000, and then maybe cross our fingers up to $200,000. That would be pretty spectacular. But there are some good things to come for Bitcoin. There's a saying that good things come in threes. Apparently bad things come in threes too. So what's with this number 3? But Bitcoin is on its way to its monthly Bollinger Band basis in red. You can see right here, this red line, around $31,000-ish as of right now, getting closer and closer. Once regained, expect some fireworks. This has shown immediate downside when it breaks through, but also immediate massive upside when it breaks to the upside. We see downside here, massive upside when it breaks to the upside. We have downside, we break through $31,000, could be some massive upsides for Bitcoin. Turns out Bitcoin may be cyclic. Did you know that? I have been told that many, many times. I would say hundreds of times in the past 4 years, but every time as it's crashing, it's hard to believe. Well, it turns out that the 50 and 150 EMA crosses from the bearish cross to the bullish cross, identical, 393 days in both cases. So despite what you want to say, we had a rinse and repeat pattern for Bitcoin. Now, let's take a look at what happened after that cross. Look at this. Short-term rally, little bit of a pullback, massive rally afterwards. Hopefully we'll have something like that coming. It does appear like TikTok. We're not talking about everyone's favorite application. Well, could be getting closer to the halving, getting closer to explosive territory for Bitcoin and cryptocurrencies. Bitcoin right now just had a cross on the 1 week chart where we can see this dipping down to the bottom has only happened twice so far. The last time it happened, right down here at the very bottom of the bull run. I can't see how small that is, but that's a lot of percentage gains that we had right there. Right now, once again, touching the band, potentially massive gains in the cards for Bitcoin once again. But a lot of people are saying we haven't had a bottom, especially those people who are shorting Bitcoin right now, suspecting it'll go down to $10,000. And it may. But A lot of people are saying it only went down 77%, didn't go down 85%, definitely not a bottom. Well, how about this? If we take a look at the 200-day moving average from its top to its bottom, well, here, a lot closer than the 90 to 70, 50, 80, whatever percent they're looking at. We have 50, 63, 58, and 61% dip. The second largest dip from the 200-day moving average. Might be a little bit of a bottom there. Right now, it does appear, if you're in the position to hold Bitcoin for 1 to 2 years minimum, Bitcoin's at its sweet spot. This doesn't say it won't go down. This says, hey, if you have a year or two, because who knows when the most expected recession in history is bound to hit and how long it's bound to last for. But if you have a couple years, this is great territory when Bitcoin is just breaking above the downtrend and also very close to this support line right here. This has historically been amazing territory for purchasing Bitcoin. And you have to remember there are two charts that I want to end on because I think that not enough people are considering what these charts actually mean. This takes a look at global liquidity, all the combined M2 money supply of all the countries, including the US, including China, including Japan, England, everywhere else. As you can see, it is growing very, very fast. There were periods when it was not growing, in gray, shaded in gray right here, where monetary supply was shrinking. And what did Bitcoin do in those periods? Price went down. But look at what happened as global liquidity goes up. Bitcoin price goes up dramatically. Could be continuing to go up dramatically, especially as China and Japan just printed a lot of money. That money could be flowing into Bitcoin and cryptocurrencies. Pair that with this one other little thing called a liquid supply shock. Now, if you were not investing in Bitcoin around when it was $10,000 back here in October of 2020, a lot of people were talking about a liquid supply shock then, because if you take a look at the liquid supply, it was increasing pretty drastically at that time right here. Fast forward to where we are right now, increasing even more quickly. As a matter of fact, we have not seen illiquid supply, which is basically saying Bitcoin is not available on exchanges because everybody took it off because they're scared of Celsius and 3AC and FTX and everything else, and they're just buying it and holding it. This is unseen since 2014. Well, this, paired with this, could make for some explosive bull runs for Bitcoin. So that's all for today's episode. If you enjoyed it, push that like button. Such a pleasure spending this time with you. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.